Good morning, everybody. Welcome back. So we have two special guests today. Some you may not have seen ever, and some you have not seen in a while. My wife and my son, Hayden.
Wife's name is Jasmine. Okay, so today we're going to be talking about the stock market. So Jonathan and I got this idea to tag team this because he's like super smart, like the coolest nerd that I've ever met, and he's like a super genius. So when he's talking about his stock investment journey, it's just like gives me an extreme headache. And so for a long time I was like, that's kind of beyond me, and I don't know if I really want to get into that. And I'm actually like a numbers person, and I still was like, I think that's a little too much for me. But just from his influence of hearing what he's doing and watching YouTube videos with him and researching with him, I'm like, okay, now is a good time for me to make money as well. Like, it's kind of silly to have like all of these opportunities out here to gain more wealth and to just be like, that's too complicated. So we got this idea to tag team together to hopefully bring a more practical and realistic perspective, which would be mine. And then even for those that are just like, I'm super smart, like I got this, then Jonathan has the point of view that will probably suit you best. So hopefully between the two of us, we can just reach more people and really just make sure that people have access to the information and that they're really taking advantage of this, like, I was gonna say easy, but it's not really easy, but it is attainable opportunity to gain more wealth.
Sounds good. So if you hear something in the background, disclaimer, that's our son. He's 1, and he
14
is...
months tomorrow.
He's 1, okay?
I'm saying 1 is 12 whole months. Like, there is a difference between a 14-month-old and a 23-month-old.
Look, I don't count by months. I'm not saying I'm 30-something and some months.
That's
like
different.
Nah, he's 1. Exactly.
Hey then.
Exactly.
You agree with mommy?
No. Crickets.
Okay, so let's start from the beginning. In the beginning, what's the stock market? But what is the stock market?
Bruh. Okay, so as the
Do we
name
need to redo
tells,
it?
no, it's fine. We'll keep it in. The stock market is essentially what the name entails. A market for stock. Okay, so similar to a market, right? So let's take Publix or your local flea market. On one side you have buyers, on the other side you have sellers.
Okay. So
a market is essentially where you bring all the items that you want to buy and sell into one area for everyone to come and buy and sell. So that's what the stock exchange does, right? So there are a few different stock exchanges, but the two major ones in America are the New York Stock Exchange and the NASDAQ. And they're both headquartered in New York.
Okay.
So those two stock exchanges collect all the companies and say, okay, we're gonna put all the companies' stock at this location for everyone to buy and sell.
Okay. I think that works. I don't have anything to add.
Okay.
Thank you for that. So how do you own a share of stock? Like, how are you able to gain access to shares of stock? Okay, it's a very good question. So the reason or the way you can do that is through a broker, right? So we can't go to, let's say, what's your favorite company? Amazon.
Okay. All right, so we all know and love Amazon. We all have probably spent way too much money with Amazon. But we can't go to Amazon's headquarters in Washington and say, hey, I would love to buy a piece of your company. So the intermediary for this is a broker. So a broker, such as Charles Schwab, TD Ameritrade, Robinhood, etc., these are intermediaries that allow us to buy shares of a company.
So basically a broker is a company that allows you to gain access to the stock market.
Yeah.
And so we'll talk through how you practically how you gain access to a broker, and then how you go about choosing a broker that's appropriate for you and your immediate needs for stock investments. Okay, so can you give me an example of a broker?
Sure. So you may have heard of.
Sure. I'm your wife. I'm not like CNN News.
I could be on CNN News one day.
Hey, you sure could.
So, bruh.
Okay, so so can you give me an example of some brokers, some well-known brokers?
I'll try again.
It was fine, but I don't know. Okay, give me some examples of well-known brokers.
Okay, great question. So you may have heard of Robinhood, Webull, TD Ameritrade, Charles Schwab, just to name a few.
Okay, yeah, I've heard of pretty much all of those brokers. So can you tell me which one you use and why?
Sure. So I use Thinkorswim. It's a platform developed by TD Ameritrade. And the reason I use it is because it has a wealth of information in the platform. It is robust. It gives me great charting, great information, great education, and also news as well. And also, one of the key things is that it's free. So there are no platform fees that I have to pay to TD Ameritrade to use your platform.
Okay, that makes sense. So for me, I started out with Robinhood as my broker. I heard a lot of people using it. I found it to be very user-friendly as a beginner. So it had a very simple layout to follow, how to connect to the stock and add it to your watch list, to know, so you don't have to search for it every time you want to look it up. It had news feed and some of the earnings information. And so I just found it to be user-friendly as a beginner. But as I continued my journey, I found some differing opinions of it, and so I started looking into it a little more. And so some of the things that I started to experience was that I guess at market open, a lot of times it's very heavy traffic period for people to buy and sell shares of stock. And so let's say I wanted to buy a share of Disney stock at 9:30, so I put in a market order for 9:30 a.m. for Disney stock, and let's say that it's $120 a share. Well, what was happening is that sometimes Robinhood wouldn't process my order until like 9:33. So I know you like 3 minutes, okay, it's not a big deal, but in the stock market, and if you're working with like thousands and thousands of dollars, like it could have a big impact. That wasn't my testimony, but just thinking ahead and trying to be responsible, it was not really a good sign. So with that 3 minutes, the stock most likely isn't going to still be $120 a share. So it could work in my favor and be $119, or it can be against me and be $122, and now I have to spend more money to buy it. And so I started looking at some other options and came across Webull, and that's what I'm using now. And I love it. I mean, it's great. It's not as simple, so I still have my Robinhood account to kind of compare information to make sure that I'm making the right decision. I've only been doing this for like 3 months, so I'm still a beginner. And so I'm just running those alongside each other to make sure that I'm making the right decisions and reading the information properly. But with Webull, I mean, their charts look great. They have even more news feed. And so I've been having a great experience.
So you mentioned some things that I kind of want to walk back and make sure that we're all on the same page on. So you were talking about at 9:30 at the market open, you were trying to create a market order. What is a market order?
Yeah, so before I answer that question, let's talk about the hours of the market. So the stock market is open from 9:30 a.m. to 4 p.m. and they're closed for federal holidays.
Correct.
Okay, yeah. And so some brokers have extended hours, and so that's something else that you can look into, that will allow you to trade outside of 9:30 and a.m. and 4 p.m. But back to your question about market order. So to me, I don't know if this is the technical way of explaining it, but when I request a market order, what I'm requesting is I would like to buy or sell X amount of shares of stock ASAP.
Okay.
Get to it.
Right. And that's essentially one of the benefits of a market order, is that it will execute your order immediately. However, one of the drawbacks, which you have to weigh the risk, is that it's essentially a blank check order, right?
Right.
So it's saying that whatever the price is, I'm going to either pay it or I'm going to
Accept it as a sell.
Yeah.
Yeah.
There we go.
Cool. So since we went ahead and talked about market orders, do you want to talk about the other ways that you can buy and sell shares of stock?
Okay. So there are many different types of orders that you can execute in the market, but the main orders are market, limit, and stop.
Okay. So what is a limit order?
So limit order is you telling your broker, either I'm going to only pay a certain amount. So say, for example, you wanted to buy Disney at 120. You can say, I don't want to buy a share of Disney greater than 120 and 50 cents. And if the price is above that, your order will not go through. If the price comes below that, it'll execute your order.
Yeah, so I've only used a limit order a few times, but I found it to be beneficial at times that I'm eyeing a particular stock while the market is closed. And so, like for your example with Disney, if it's $120, usually I'll go up a couple of cents, so that at the point that they are able to execute my order, that it's like, okay, I definitely want this stock. I'm not gonna pay astronomical prices for it, but I think it's reasonable to think like, okay, a stock like Disney, if it's 120, it may go up to $120.50, and so I might put that as my limit order to make sure that it gets executed.
Sounds good.
And then I don't have to like sit there on my phone and like wait for that moment. It can just go ahead and process the request. Have you used limit orders?
Definitely. So when I use a limit order, I use it as an offset. So I'll say price plus 10 cent, 5 cent when I'm day trading. So I want to get in, but I don't want to get in at an extremely high price. But I do know that stocks move very quickly when you're day trading. And so I'll have an offset of maybe 5 cents or so. So for example, if I'm day trading a stock and it's worth $10, I'll say, okay, even though I put the order in at $10, my offset will be $10.05. And so anywhere between that price, I'll be able to get in. If it goes above that price, my limit order will not be executed.
Okay. All right. And then the last one you mentioned as like a popular order was a stop order.
Yes.
So can you tell us what that is?
So essentially a stop order is, or really a stop loss order, is to make sure that you're not going to go below a certain price. So let's say, for example, you bought Disney at 120 and you may not have time to watch the market every day. So you put in a stop order at, let's say, 119, right? So you're trying to make sure that you're not going to lose too much money. Or let's say, for example, you bought Disney at 120 again, and the stock is at, let's say, 150, and you say, okay, well, I'm going to be busy for a while. I can't watch the market, but I want to lock in that gain of $30. I'm going to put a stop order at, let's say, 147. So no matter what happens, if the stock comes down below 147, you're going to lock in that price because your broker is going to automatically create a sell order at that price.
Okay. But if it keeps going up, then nothing will happen. You'll just
Correct.
stay and continue to get that gain. Okay. Cool.
Thank you guys so much for watching. We really do appreciate it. If you'd like to see more content just like this, check us out on YouTube at Craw Park. See you guys next time.
Bye.
Look at your sign. You got hands. Use your hands. Jesus.
He's being good. He's being good.
Okay.
So can you walk me through like what is a broker?
Can you do it when I'm ready? You.
Why are you not ready? The issue is not me going. The issue is you not being ready.
You hear yourself getting loud.
That's why I came down, because I know that was a perfect opportunity for you to include it in the video and then portray me as this
As who you
horrible person. Okay. Okay. There are other platforms that probably do the same thing, but yeah. So